So most of you watching this right now are probably still unprofitable and you've never even gotten a payout. I want you to actually sit there and think about that. How many years have you been trading? 2 years, 3 years, 4 years, 5 years, 10 years? And you've seen absolutely zero success, no results, no payouts, maybe a funded certificate at most. That's absolutely embarrassing. If you sat there watching ICT content, mentorships, all of his videos on the channel, and studying those materials for hours on end relentlessly, and you're still clueless when you approach the market every single morning, there's clearly something that we need to change as soon as possible. Most traders that you see online that are consistently getting funded and are consistently getting payouts, they're not trading a model that was created 4 years ago. Sure, the foundation stays the same and the basics that they follow stays the same. However, there are changes, there are tweaks. They improve the model, they back tested it, they forward tested it, they see what works, what doesn't work, and they remove the stuff that doesn't work and start implementing factors that make that trade setup even higher probability so they can increase their chances of winning. Guys, if you never adapt, you're obviously gonna get left behind. So that's exactly why I'm making today's video. I'm gonna be showcasing you the updated version of the 2022 model, the model that I personally trade every single morning with my VIP members. We're going to be going over a PowerPoint presentation that lays literally everything out from A to Z. So we'll be covering my A+ checklist criteria. We'll also be going over risk management on prop firms and also a live account, depending on which route you decide to go. How to trail your stop loss when the trade actually goes into a profit and how to manage that position. And then lastly, we'll also go over targets. So what do you aim for? Do you aim for a 1 to 2 risk to reward? Do you aim for a 1 to 3 risk to reward? And then towards the end of the video, we'll actually go over some live trades that we took this week with the VIP Discord. All of the wins and all of the losses I'll be showcasing you in today's video, full transparency. And that way you guys also get a visual example of how the model was actually traded, and hopefully you can understand that better. So let's not waste any more time. Let's jump straight into today's video.
All right, guys, welcome back. As you can see, we are in a different location. I'm in the middle of a visa application. So I'm currently traveling. I have to be out of Thailand for a few weeks, wait for it to get approved, and then I can return. So I'm not at my current setup. I'm actually on my MacBook. But anyways, we're gonna be literally going over every single thing that you need to know as of this video today about the 2022 model, 2 model system. And we'll also be going over this week's trading results, all of the trades, wins and losses that we took with the VIP Discord live trading community. We are up over 8.8R on the week, guys. Insane results. So we're gonna be breaking down every single trade towards the end of the video, but as of now we're going over a little PowerPoint, so let's get straight into it. All right, guys, apologies for interrupting the video here. Just a very quick announcement. Okay, this week the VIP Discord group is on absolute fire. Okay, we're up 8.8R on the week. Okay, absolute crazy results. And to celebrate this absolute crazy week, I decided to give a little gift to you lot. We're running a 50% off lifetime access sale for the VIP Discord. So if you guys want to come watch me trade live each morning at 9:30 a.m. New York time, copy my exact entries and exits, where do I put my stop loss, get alerted when I actually start trailing my stop losses, talking you through when I'm in a live position, how do I manage that, and getting access to everything. Okay, this is just a brief summary of what you'll get access to. I will go over the trades in just 1 minute to show you all of the wins and losses for full transparency. If you guys want to gain access to that, it is currently 50% off. So the usual price is $1,000. Right now you can get in there for $499 only. So 50% off, take advantage. All right, huge opportunity. But yeah, this is this week's. So if we scroll up to the 22nd of June, which is Monday, you can see I alert a long entry. I give you a stop loss, TP. We actually got stopped out in this trade for a profit of 1R. Then we took another trade, got stopped out for negative 1R. Result on Monday was break even. Tuesday, we took a long and we actually ended up hitting a 3R on that day. So another banger day. Wednesday, we took 2 losses, so minus 2R. And then we took another banger trade, which ended up being like 2 hours. It was a very long trade, but we ended up getting stopped down at profit for 2.2R. So that day was like a break even plus 0.2R. Then we had Thursday, long 3R secured, banger. And then Friday, we had another banger, okay? Another 3R trade hit. We actually ended up getting stopped out in a profit for like 2.6R. So yeah, crazy results, guys. I just thought I'd share that with you lot and show you the wins and also the losses, right? Because a lot of people don't shed losses, but this is fully transparent, guys. This is exactly what you get with this model. You will obviously get a lot of wins and you'll also get losses, okay? That's how trading works. It's an expense. But yeah, this is how the Discord looks when you gain access. So you have trading resources, a bunch of core content in there, me breaking down the model, ton of videos. We got PDFs on A+ checklist, risk management, psychology. Got some copy traders and backtesting journaling tools you can use as well. This is obviously the signals channel where if you can't get access to the streams, you can get alerted, right, and actually take the trade. Weekly results, daily bias, general chat, trading chat. You can have an Ask Keswick chat as well. You can just ask me any question that you'd like, and it will usually be answered within 24 hours if I'm not busy. Wins and results chat is popping off, okay? I mean, look at this guy. He's up 9 grand a month. You know, like, we're just winning. Every day we're winning in this chat. Everyone's making money. We got some sections on like tax, Dubai setup, Thailand visa, and also a backtesting channel as well. I'm not going to bore you with all that stuff. You all can go over it once you gain access to it. But yeah, that's just a little brief summary, guys. Okay, we're killing it. VIP members are smashing it. And of course, one last thing, this is the live training room. So when I go live, this is obviously the channel you guys want to be in. But yeah, anyways, let's jump straight back into the video and break this model down. All right, first things first, the non-negotiables. This is the A+ checklist criteria that you want to follow every single morning before approaching price. So number one, we must have a liquidity sweep. Price must take out a form of either buy-side liquidity or sell-side liquidity, okay? Examples of this: internal range liquidity, external range liquidity, Asia lows, Asia highs, London lows, forms of session liquidity. All right, London is from 2 a.m. to 5 a.m. and Asia is from 8 p.m. to midnight. So you're going to find the highest point and the lowest point within that time frame window, and that will be your level. We also have the low of day, the high of day, previous daily high, previous daily low. Okay, these are 4 major points of liquidity that you also want to pay attention to. Someone asked me as well, how do you mark out your low of day and high of day? You start from midnight open, okay? Find the highest point and the lowest point. Those are your levels, okay? And if price takes out one of those levels, let's say the high of day, and doesn't present you a bearish setup and just keeps moving higher, then obviously you'll just carry on updating that level. Number 2, once we've had a liquidity sweep, we want to see price displace sharply in the opposing direction. So for example, if we sweep buy side liquidity, we want to see price displace lower. If we sweep sell side liquidity, we obviously want to see price displace higher. Number 3, a market structure shift, okay? When price displaces, it will break below either a swing low or it will break above a swing high, okay? Depends on the direction that you're trading, but this is what we call a market structure shift, okay? This is very important. If we do not have this, then the trade is not valid, and that's something that you should not be taking at all, okay? Wait for a shift in structure. Also, a very big misconception in the space. A lot of people ask me all the time, Ben, why did you take that trade? Okay, we didn't get a candle closure above that swing high. That's not a valid shift, blah, 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 okay? This is all lies. If you watch ICT's mentorship and you actually listen closely and pay attention, you will hear him say, we do not need a candle closure above a swing high for a structure shift to be valid, okay? As long as we get a wick above or below, that is a valid market structure shift. Yes, it might be less likely to play out or less probability. However, it does not make it not valid, okay? The shift is still valid. However, if we get candle closure, of course, it's going to be higher probability. But it also does not mean you should not take that trade because we've not had a candle closure, okay? If the shift is there, take the trade. Number 4, fair value gap, okay? This is the entry model that we use. As soon as price taps into the gap, as soon as it goes into the edge, that is your point where you execute, okay? There's no thinking, there's no doubting. The model's there, you enter the trade, you accept the risk. If it plays out, cool. If it doesn't, move on to the next one. Number 5, ES correlation, very important, okay? If you're not paying attention, guys, to ES, I'm sorry, but you're going to be missing out on a lot of trades, and you're going to be also taking a lot more losses. Okay, so NQ is the asset that we trade, and it must mirror ES. So to give you an example, if we have a A+ setup on NQ, we have a sweep of liquidity, right? Displacement, gap, shift and structure. And you look at over at ES and we don't have a structure shift, we don't have a gap, and we also don't have any displacement. Is that correlated to you? No, of course it isn't. So you're not going to take that trade. So please make sure that price is moving in a similar manner on both assets. Okay, they usually move exactly the same. So if they're not moving the same and the ES is that buy side and NQ is that sell side, that's most likely not a condition you should be trading. So please pay attention to ES, guys. It will save you a lot of losses, and it will also open your eyes sometimes as well to what's actually happening in the market, right? Because ES might show something that NQ isn't. So pay attention to both, guys. Have NQ on one side of the screen, ES on the other, and you should be fine. Number 6, time window. Okay, only execute instead of 9:30 a.m. to 2 p.m. time window. So all of these times I give you guys are in New York time. If they're outside that window, don't take the trade. Okay, I don't trade pre-market. You'll never see me taking the position at like 9:25, anything after 9:30. So I usually give a minute for that opening bell when the stock market opens. There's a lot of volatility going on. You don't want to enter position then because there's a lot of manipulation going on as well. So if there is a setup pre-market and price gives you an entry at 9:30, give it at least a minute before you enter that trade. That usually will save you as well in case that trade gets ran through or disrespected. You've saved yourself a loss, right? So give it about a minute if you're going to take a trade that early. But yeah, anywhere from 9:30 to 2 p.m., that's your window where you want to look for these setups. So you get the whole of the New York AM session, including lunch, and then you get the PM session, 1 hour silver bullet window from 1 p.m. to 2 p.m. also. The PM does run all the way to 4 p.m., but we don't trade that long, okay? We're not going to be sat on screens for all day, right? So 9:30 to 2 p.m., that's fine. All right, so here are the two models that we trade. We have a reversal model and we also have a continuation model. So if we trade both of these models combined, we get around a 56.25% win rate, okay? If you only trade one model, meaning you only take the reversal plays, you're sitting around a 77% win rate. Continuation, you'll be sitting around like a 54% win rate if you only take continuations. The 56% win rate is if you take both the reversal and the continuation models, okay? It also makes you adaptable to market conditions, right? Because not every single day you're going to get reversal. Some days, especially at all-time highs, the only models that you're going to be trading is a continuation because price just keeps continuing higher and higher and higher. So the way I backtested this model, guys, and the way it performs the best, even though the win rate is slightly lower, you actually make way more money on the year if you take both the continuation setups and the reversal setups, okay? If you want to be very selective with the trades you take and you actually will make less money with this approach, but you will have a higher win rate, then you can just stick to the reversal model only, okay? That is totally up to you guys. That is the beauty in trading, okay? You can pick your own strategy. You can build your own model, backtest it, make sure it's profitable. I'm giving you 3 options here, guys, okay? You can either trade the reversal model only, the continuation model only, or you can trade both of them combined, which is what I personally do, and that provides the best results, and you make the most money with that. And I have the results and data to back this up, that this does in fact actually work over a year-on-year basis. So you can pick your source, guys, right? Or you can go watch ICT's videos and pick a whole completely different new strategy, right? It's totally up to you. But I'm just sharing with you guys what has personally worked for me, and you know, it might resonate with you as well. Okay, so here's a full breakdown of the continuation model. 3 steps. You need a 1-minute internal sweep of liquidity. So price must take out some form of sell side or buy side on the 1-minute time frame minimum. So you see that happen all the time, guys. This is very easy. Number 2, more importantly, this is what we actually need. If we don't have it, then there's no trade. Price must deliver out of a 5-minute gap or a 15-minute gap, okay? So as long as we're delivering from that imbalance and then we get that displacement, shift in structure, gap, and entry on the 1-minute time frame, that is a valid continuation model that you can take, okay? And then number 3, obviously, target your 1 to 2R. We don't need any major points being taken out. As long as we've taken out some form of internal liquidity, and we're delivering out of a 5 or 15, and we also have the whole foundation, the model on the 1 minute time frame play out, then that is your continuation model broken down in a nutshell. Okay, reversal model, we need a sweep of major liquidity. So there are 4 points which I look out for. We must take out either the low of day, the high of day, the previous daily high, or the previous daily low. Okay, if we've taken any of these levels out, and then we get the displacement, the shift in structure, and the entry of a fair value gap, we can take that trade and target a 1 to 3R. If we've taken out such significant levels, okay, it probably means we're going to see a reversal, right? So that's why we extend the target and we aim for a 1 to 3, because overall it's going to be a higher probability move. Okay, so aiming for a 1 to 2 risk to reward versus a 1 to 3 risk to reward. I try to break it down the most simplest way I possibly can, right? We have ranges inside the market, which are called obviously price ranges, right? So if we're inside of a price range, let's say we have previous daily high and previous daily low, right? That's our price range for that day. If we're inside that price range, what's price doing most of the time? It's just consolidating, it's ranging, right? Up, down, up, down. There's not really any real direction. Hence, if we're inside the range, we aim for a 1 to 2, right? And we need that imbalance to support our trade to get that continuation model. Okay, without the imbalance, it's going to be a very, very low probability continuation model. And that's why we simply don't take the trade if we're not delivering out any gaps. When we aim for a 1 to 3, we've actually broken out of that range, right? So we've taken out the previous daily low or the low of day. We're no longer inside that range. Hence, we aim for a bigger target because we're expecting reversal, right? We aim for that 1 to 3. Okay, so with the 1 to 3 scenario, trading stops is very different compared to the 1 to 2 scenario. So pay attention closely. I've literally broken it down perfectly. You can screenshot this, guys. Once you get used to it, obviously you won't need it. But for the time being, I would save this and make sure you're trading your stops in the correct order. Because if you're not, you might get stopped out and then the trade will carry on in your favor. So try not make any mistakes. Save this, study it until you get to the point where you know exactly what you're doing, right? So when a 1 to 1 gets hit in a 1 to 3 trade, right, you want to trail at least aggressive as possible. So reduce risk anywhere from 30% to 50%. If there is nowhere valid to trail to, keep your stops in original placement. Okay, that's very rare. Usually you're going to reduce your risk by at least 10-20%. But if there's a point where you can trail to, like a swing low or a swing high, a valid structure point or a PDRA, right, that's offering you around a 30 to 50% reduction, that's where you're going to move your stops to, okay? A 1 to 2, your stops go to break even by default. If there are aggressive price legs within the move that you can trail to, then you can move your stops into a profit aggressively. So if there's swing lows or swing highs, valid structure points that you can trail into a profit to, make sure to do that, okay? That's for 1 to 2. By default though, it goes break even. That way it's a risk-free trade. Now, you also want to look at ES when you're trading and you want to lead off NQ. So if ES hits a 1 to 1 first, we don't care. We're not going to move our stops. We need to wait for NQ to reach that 1 to 1 before trading. Now, if ES hits a 1 to 2 first, then it's different, okay? Then you want to move your stops on NQ to either break even or into a profit if there is any valid structure points. Now, if ES hits a 1 to 3 first, we do not close out. We trail very, very aggressively on NQ, usually below that recent candle's low. Okay, super aggressive, not behind structure points, just making sure that we secure as much profit as possible, right? Because ES has already taken our objective. All right, trailing stops on a 1 to 2R scenario is completely different. So when a 1 to 1 now gets hit, we don't trail very minimal, okay? It's actually the complete opposite. We trail as aggressively as possible. So once price reaches a 1 to 1 on NQ, not on ES. Remember guys, on ES, we don't care. So on NQ, you want to start trading as aggressively as possible behind valid structure points and PDRAs to lock in as much of the move as possible. Again, ES 1 to 1, we don't care. We simply wait for NQ to hit that 1 to 1 before we start trading. And then if ES hits the 1 to 2 first, we also do not close out. We will just trail very aggressively on NQ into a profit. All right, so risk management, guys. There are 2 routes that you can choose. we have the live account option route, or we have the prop firm route. Okay, either one is fine. I think the end goal for every single trader should always be to eventually move onto a live account. So if you are going to go the prop firm route, I'd recommend getting a few payouts, using the payouts to fund your own live account. Okay, and then growing and scaling that live capital. So let's go over the first option. This is my recommended option. If you have 20K that you can use and you can afford, to lose, that you don't really care about, 100% open yourself a 20K live account. Trust me, you're not going to regret it, guys. And risk 5% per trade. So this is a very aggressive approach. That's around $1,000 risk per every single trade. And this gives you 20 losses of wiggle room. So if you have a profitable strategy, guys, like this one, you're never going to take 20 losses in a row. Okay, I've backtested this as well. The worst month that we had when I was backtesting, we had a -9R month. So you would have lost around 50% of your capital in your live account. As long as you can stomach that, you should be fine, because you would have recovered just fine. Okay, but you would have had around a -50% drawdown. Now, guys, with this model, it's completely normal. Okay, I've had weeks where I was down in a drawdown -25%. And I recovered from it, and then next week I'd make 53%. So it's totally fine. Drawdown is normal. Don't make it a bad thing. Every single strategy is going to have some sort of drawdown period, right? And that was only 1 month out of the year that we had such a huge negative result, right? -9R, and you've had a 50% drawdown loss, okay? But if you carry on trading throughout the year, you will recover that very quickly, and you're stacking your account up and you're growing it. As it grows, you're risking more, it compounds. So the live account option, guys, is very good. You're never ever going to take 20 losses in a row. I've never heard it happen, okay, unless you have a really bad strategy and on paper you actually are unprofitable, then you might take it. Myself personally, I've never done that. The most losses I've ever taken is about 8 losses in a row. Yeah, just to give you a perspective, guys, this week we had an amazing week. However, last week I was negative 25% drawdown in my account. I took about 6 losses, so 3 full-size losses and 3 half-size losses, okay? Now, the week next, which is obviously this week that I'm breaking down now, I gained plus 53% on my live account. So I not only recovered the drawdown, I actually made some additional profit on my live account. So that's just a perspective, guys. It's very common that you go into a drawdown and you have bad periods, but it is also very common where we have amazing periods and we have runs where we keep winning and we stack up the account, right? And we build a big buffer. So when we do get a drawdown, it doesn't matter because we're not playing with our money. We're just playing with profits. So that's option number 1. That's my recommendation. And then we have the prop firm route. So I would recommend getting a 50K account, risking 1% on that account, which is $500. That gives you 4 trades per account. So if you take 4 losses in a row, you're obviously blowing the account, right? But that's exactly why you want to buy 5 accounts and you have them ready, right? So 5 times 4, that's 20. Again, 20 losses of wiggle room. So you can afford to risk 1% per trade. And if you do blow the account, you just move on to the next funded account, right? So there you go. That's your risk management, guys. And yeah, with that approach, with the model, the amount you're risking, you should be completely fine, guys. You're not ever going to blow your account with this approach. Okay, and the fun part, weekly results, guys. This is exactly what we managed to achieve this week, trading the model, taking every single trade that we're supposed to take, everything that was valid, and this is the results. So we came out with a 8.8R profit on the week, a win rate of 62.5%. We had 5 wins, 3 losses, a total of 8 trades. So Monday we had a break even, Tuesday we had a 3R gain, Wednesday plus 0.2R, Thursday 3R, and then Friday was a 3R as well, but I actually closed out early, which I normally don't do, right? But since it was a Friday and ES really took our objective, I just decided to play it safe. Fridays are known for not the best price action and just a lot of manipulation, so closed out early there. But yeah, this is the whole dashboard, so you can see all of the trades that we took here. You guys can go back test this if you want as well. You can see Monday we took 2 trades, break even result, right? Plus 1R, minus 1R. Tuesday we had a 3R banger. Wednesday, we took 3 trades. So first 2 losses, -1R, -1R, -2R. And then we had a short trade that like I was in for about 2 hours and actually ended up hitting a 3R. But again, we tried very aggressively and we got taken out for a plus 2.2R. So yeah, net profit 0.2R. Thursday plus 3R, and then Friday again plus 2.6R. This should have been 3R, but yeah, it happens. So yeah, that is this week's results, guys. Amazing stuff. I'm honestly so happy with the results the members are getting inside as well. Everyone's smashing it. Everyone's making money. Everyone understands the model and actually trades it how it's supposed to be traded. So yeah, I'm hoping that, you know, these videos that I make, guys, do actually help you and you end up taking this model, taking the information I've given you and actually applying it into the live market and seeing some results with it. That would be so great, you know? So I hope that everyone watching these videos is actually sat here paying attention and learning the stuff, because it works, guys. Trust me, it does work and it will provide crazy results if you trade it properly. So yeah, that's about it, guys. That's the PowerPoint done. So now let's go over some trading examples. We're going to jump into TradingView. I'm going to go over a few trades that we took from this week, just showcasing you an actual visual of how the model works. That way you might understand it a bit better rather than me just, you know, going over PowerPoint. Some people are more visual learners. Some people learn off dashboards, right? So let's get into the charts. All right, guys. So this is Monday's trade. Okay, it was actually a stop out. So we got stopped out for like 1 hour profit, but it was a continuation model. So I'm going to break it down because this was actually like the only continuation model trade that we took this week. There was a lot of 3R trades, but not too many 1 to 2s. So let's break it down. Now, before I go into the day, guys, I start off with marking out my levels. So I'll mark out the previous daily low, right? We're in a Monday, so Sunday is going to be the previous daily low. We don't have a previous daily high, unfortunately, because we took it out. So it's not something I'm going to be marking out. The next thing I go to is my Asia lows and Asia highs, right? So 8 p.m. to midnight is Asia session. This is the lowest point. So this will be my Asia lows. Then I go to my next session, which is London session, right? So you can see here, 2 a.m. This is the lowest point. London is from 2 a.m. to 5 a.m. Okay. We also do not have any Asia highs, and we do not have any London highs as well because we've taken it out. The next thing I do, guys, is I go from midnight open. I find the lowest point and the highest point. So this will be my lowest point, and that will be my low of day, right? And my high of day is going to be here. Okay, and that's it, right? You can also mark out the gaps. So any 15-minute gaps or any 5-minute gaps that you see, you can mark them out. I don't tend to mark them out. I'll just see them on the chart as they're happening. I do also have an indicator that trades this exact same model, guys. If you want to check that out, check out the links in the description below. And it marks everything out for you. So it'll mark out the high of day for you, the low of day, London, Asia, right? It will mark out a 5 or 15-minute gap. It will even alert the trade and give you the actual signal, right? Obviously, don't rely on it because the only person you will rely on is yourself. But I do sometimes use it to mark out my levels. You know, if I'm lazy or if I'm tired, I might not see a gap. Okay, the indicator will save me and it will show me that gap, right? And it will alert that entry. And that way, I'm not going to miss that trade, right? So don't use it to signal bot. Use it for convenience, okay, if you are going to use it. But anyways, let's skip to 9:30. So you can see 9:30 came out and it swept the high of day. So at this point, I was actually looking for shorts, right? I want to enter short here, stop above the swing high, and then target a 1 to 3. Now, since we shifted structure so aggressively to a point where price is taking out equal lows, right? Then this low. And I think on the yes as well, we shifted even lower, right? So we had a huge divergence. Once price has taken out so many objectives, for example, sell side or buy side, in this case is sell side, you don't want to be going short once we've already taken it out. So in this case, I actually noticed, okay, on the 15-minute gap, we've come down and we're delivering out this 15-minute bullish gap. So we might actually get a continuation model, okay? So I simply waited. We then got a shift in structure, which was here, a break above the swing high. We had a clear displacement, a gap as well. Now, since it's such a big range, guys, I'm not going to enter off the first gap that I see, right? I'm going to measure from swing high to swing low, find premium and discount at range, and enter in a discount. So what's the first gap that I see in a discount? It's going to be this one, right? And the stop loss actually makes sense as well. At the swing low, 80 handles, you know, if we enter off the first gap, 146 handles. I don't usually go over like 100 handles. That's my max stop. And yeah, we aim for a 1 to 2. You want to mark out your 1 to 1. So 1 to 1 is going to be here. And then 1 to 2 is going to be there. So let's patiently wait for an entry. Boom, we get the entry. We enter long. Look how close we came to getting stopped out. And I think ES actually took this. We had a bullish SMT in our favor. And then price ends up hitting a 1 to 1 there. So once a 1 to 1 gets hit, the way I move my stops in a 1 to 2 trade scenario is I want to move it as aggressively as possible. So where is valid structure points we can move it to? So we have our first structure point here, okay? Then we have our second structure point here. So comment in the comment section down below right now, where would you put it to? Number 1 or number 2? I would personally myself move it to number 2. Why is that? Because this, you're not really reducing much risk, right? That's like a 10% reduce. Here, you're literally going break even. You're actually going slightly into a profit, not by much, but you are going into a profit. And this is amazing, okay? Because what do we have here? We have a swing high that has been broken through with displacement, an aggressive move, including many imbalances. And we also have a retracement into a gap. So this gap, you can see here, has been respected with this move. So technically this low that rebalanced that inefficiency shouldn't be revisited, okay? Especially when it's broken through that swing high. We've broken structure again. So if this low now gets revisited, that's going to invalidate our trade anyway. We don't want to be in that trade. So we're moving our stops to that swing low. We also have a bullish order block. So any down close candle, guys, in a uptrend should act as support and should push price even higher. So as soon as the open price gets violated, that now becomes a bullish order block, okay? This series of down close candles here is your whole order block, okay? I know some people mark out slightly differently. You can just mark out the last candle there, but truly speaking, the order block is all 3 of those candles, okay? Because they're consecutive. So if price retraces back into this area, it should respect this order block and push price obviously higher. So let's skip forward here and see. Okay, pretty decent reaction off that order block, you can see. And again, we've broken that swing high now. And we have a swing low that rebalanced the gap again. So what I'm going to do, I'm moving my stops into a profit just below this swing low, right? And if we get stopped out, we're securing about a 0.8R on this trade. So let's see. Okay, and boom, we ended up getting stopped out there for around a 1R profit, 0.8, something like that. But yeah, that was the first trade that we took on Monday. And I believe we took a loss after this. So we had like a break-even result. But this was the 1 to 2 continuation model example. Let's go over it 1 to 3 now so you guys can get a better understanding. All right, so this trade was a banger. Okay, this was on Friday. And yeah, it was a super clean trade. There was like a lot of controversy around this trade as well. So I'm going to break it down completely because a lot of people in the comments were saying, why'd you take this? Blah, blah, blah. Right, not knowing what they're talking about. So I think it's a perfect example to break down. Let's go over it. So again, same thing. Friday, we go into the previous day. Okay, Thursday, find the highest point, previous daily high, bang. Find the lowest point, previous daily low. Okay, it's going to be this low, bang. Now move on to the sessions. So first session is Asia session, 8 p.m. to midnight. Find the highest point, that's going to be your Asia high, this little swing high here, bang. Find the lowest point, that will be your Asia low. So in this case, we actually have the previous daily low and Asia lows at the same level, okay, because this is still within midnight. That's your Asia lows. Then we move on to London. So 2 a.m. to 5 a.m. So you can see here, London low actually got taken, so we won't mark that out. London highs is still intact, so we mark out London highs. And this is actually the high of day as well. So if we go from midnight, we can see that the low of day, which is here, got taken out. And then the high of day matches London highs. So if we jump into the 1 minute time frame, we can start looking for some longs, right? Because we've came down, we've taken out a major liquidity level. a low of day. That's major. Okay, we look for 1 to 3. So you can see here, 9:30 actually opens, and there is no model as of the moment. There is a shift in structure, displacement, and a gap here. But the reason why I'm not entering long of this gap is because, again, guys, we've shifted structure too much. So ES, I'm pretty sure, came up all the way to this high. It came like super close to this high as well. That's way too much. Price has taken out way too many objectives. Okay, I'm no longer interested in that trade. If price has ran so far away from my entry, when it retraces, it's most likely gonna disrespect it and run through it. Don't enter that position. Okay, so let's see what happens here. Bang, got ran through. Now, just to clear things up as well, guys, the low of day, it does get updated. So if we don't get a long model that we can take, then you'll just update the low of day. So now the low of day moves to this low. This is now the lowest point, right? The previous one got taken out. Now we have a new one. So we wait again, right? Price came down again, takes out the low of day. Now we wait for a shift in structure, displacement, and a gap to enter off. So let's patiently wait. Do we get that? Okay, we have a displacement, we have a gap. Do we have a shift in structure? No, we do not. We have not broken above this swing high. So we carry on waiting. Okay, now we have a recent swing high. So always go the recent swing high, guys. Okay, the recent swing high now gets taken out. So we displace through it. We create a gap as well. And as soon as price gives me an entry, okay, I entered straight away off the edge. Stop was at the swing low, and I aimed for a 1 to 3. Now notice how this trade is super clean, guys, because the 1 to 3 aligns perfectly with London highs and the high of day, which is the drawn liquidity anyway. Okay, I don't use daily bias anymore, guys. I have a neutral bias every single day. But when a drawn liquidity aligns with that fixed target, that's going to make the trade like super high probability, because that's where we're expecting price to head to anyways, right? So that just adds to our trade. That's another confluence. So anyways, I enter, right? Some guy in the comments said, bro, why'd you enter? You have to wait for the first candle to close and then enter, right? And because it closed like this, we wouldn't take this trade, blah, 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 blah. Okay, that's stupid. Don't do that, because when the model presents itself, when we've met all the objectives, we met the criteria on the checklist, okay, we've swept low of day, we've then displaced, we've then shift structure, we then had a gap. There's nothing else to wait for. Why are you sat there thinking, oh, I need to wait and see how this respects? No, just enter the trade, accept the risk. If it gets stopped out, it gets stopped out. That's it. Okay? If it plays out, great. If it doesn't, move on to the next trade. This is a completely valid trade to take. So that was the first like stupid comment someone made. Second comment wasn't not so stupid, okay? It's a big misconception in the space, guys. A lot of people think that you need a candle closure above the swing high to make the shift in structure valid. I'm here to tell you, you do not need that, okay? If you watch ICT's videos, he does clearly say you don't need it. For some reason, people say you need it, okay? You don't. Yes, it does make it higher probability if we get it. If we don't, it doesn't mean the shift is not valid. It's still there. The trade is there, okay? So anyways, we took our long off the edge of the gap, stop goes at the swing low, and then we start marking out our targets. So 1 to 1 is here, right? I'll draw it out. My indicator actually does this for you as well, guys, if you're interested. 1 to 2 goes here, and then 1 to 3 is our TP. So you also have ES on the other side of the screen. Pay attention to ES. Okay, if ES takes some of these levels, you'll trail your stops accordingly, right? So let's skip it here and see what price does. Now, it did consolidate for a long time. Eventually broke out. We hit the 1 to 1. So we want to trail stops anywhere from 30% to 50%. That's also at valid structure points. So we can see plenty here, okay? We have 1 swing high, 2 swing high, 3 swing high, okay? Which one am I going to go for? Comment in the comment section down below, 1, 2, or 3. I'm personally going to go with number 3 because we have an 88 handle stop loss. If we move to number 3, we have about a 46 handle stop loss. That is well within the range of 50% reduction. So we're going to go with 50% reduction just below this swing low, and we're paying attention, okay? If ES takes out a 1 to 2 before NQ, move your stops to break even, okay? Okay, so bang, 1 to 2 has now been hit on NQ. What do? Move your stop to break even. or move it into a profit if there's any valid structure points. Again, guys, where would you trail it to? There is definitely a place you can trail it to. Comment in the comment section down below. It says all learning experiences. You guys can comment. I'll reply to you, and that way you're learning as well. So anyways, I'll move it to this swing low here. Why I'm going to move it there into a profit? Because it's a down close candle. We've violated the open price. We've displaced above it, broken a swing high, created a swing low. Okay, this down close candle, every bullish uptrend, down close candles should act as support, and they should push price even higher. We also have an aggressive move paired with an imbalance. So this candle shouldn't really be broken through. That's my stops there. Worst case, we get stopped out for like a 1 hour, 1.2 hour profit, whatever, right? Anyways, we carry on waiting. What do we get next? We wait for the next displacement. Okay, boom, we get the next displacement. Now, I mean, my stops further into a profit below this swing low. Okay, again, down close candles, guys. They all should support price and push it higher. Okay, and 1 to 3 hit. So at this point, I believe ES actually took our 1 2 3. So we started trading like super aggressively. And I believe I put my stops just below this candle's low. And obviously price took me out for like a 2.6R profit. But you can just keep your stops at the swing low. That's where it should be. But when ES takes our objective 1 to 3, and it took London highs, it took high of day, all the draws were taken, I'm being super aggressive, especially because it's a Friday. And Fridays are known for stupid things happening, right? Price will not hit your take profit. It'll be 1 tick away from it, and it'll retrace all the way to break even. So you got to be very careful on Fridays. And yeah, I just trailed very aggressively, secured 2.6R. I'm happy with that. But again, that's a 3R trade there that ended up playing out. So other than that, guys, we have come towards the end of the video. All right, I hope you lot enjoyed this kind of weekly breakdown. I've tried my best to explain everything from A to Z in the most simple way as I possibly can. If you have any questions, okay, feel free to comment in the comment section down below. I'm always replying to comments. I'm always helping you lot. I'm trying to provide as much free value as I possibly can. So if you have any questions, make sure to ask them in the comment section, and I will try to help you. But yeah, other than that, guys, it's been a great week. Okay, plus 8.8R on the week. Thank you guys for watching. If you're interested in watching me trade live every single morning at 9:30 AM New York time, join the VIP Discord. There's a link in the description below. We're also running a 50% off lifetime access sale as we speak. I'll be running this for like the next 72 hours only. So make sure to take advantage of that opportunity and that sale. The usual price to get in is $1,000. So right now you can get it for only $499, which is 50% off. Crazy discount. Because we had such a good week, I've decided to give a little gift to you lot and give you the opportunity to actually gain access and trade with us live. Okay, we trade every single day live. You get to see all of the wins, all of the losses, full transparency, my breakdowns, when I'm inside of a live trade, how do I manage my position, walking you through step by step. If you can't tune into the stream, guys, don't worry. We've got a dedicated signals channel that sends in all of the alerts automatically. Okay, so if I move my stops, if we hit TP, if I enter long, if I enter short, okay, all of that is just alerted. So it doesn't matter where you are. I mean, you should be at your screen trading, but if you're at a job or whatever, you can still take these trades off your phone and profit. So anyways, guys, I hope you lot enjoyed. Have a great rest of your weekend, and I'll see you lot on Monday inside of the live stream. And hopefully we'll have a great trading week ahead of us. Take care, guys.